Hi guys, welcome to Golden Eye. Today in this reading we are studying a new and important chapter of hire purchase system and installment payment system. Hire purchase means a transaction where the goods are delivered to the purchaser immediately on signing of agreement and to pay purchase price in periodical installment. These installment may be monthly, half yearly, quarterly or annually based on the terms of the agreement. Let's understand this through a small example. John is the buyer and buyer will be called hire purchaser. Hyundai company is the seller and seller will be called hire vendor or hire seller. John purchased a car of rupees 10 lakh rupees from Hyundai company. This is the cash price, and paid 1 lakh rupees as a down payment to the Hyundai company. So 10 lakh rupees minus 1 lakh. So balance due amount is 9 lakh rupees. Interest rate is 20%. Suppose John has to pay 9 lakh rupees to Hyundai company in 3 equal installment. So 9 lakh rupees divided 3 is equal to 3 lakh rupees per installment. This is first installment, this is second, and this is third installment. So 3 lakh rupees per installment. And along with installment, he has to pay interest also. So interest we will calculate on 9 lakh rupees. Why 9 lakh rupees? Because out of 10 lakh we have paid 1 lakh rupees as a down payment. So balance amount is 9 lakh. So 9 lakh rupees into 20% is equal to 1 lakh 80,000. So 3 lakh plus interest 1 lakh 80,000. So total installment is 4 lakh 80,000. Second installment 3 lakh. Now in second installment we will calculate 20% interest on rupees 6 lakh. Why 6 lakh? Because out of 9 lakh rupees 3 lakh has paid, so balance is 6 lakh. 9 lakh rupees minus 3 lakh is equal to 6 lakh. Then 6 lakh into 20% is equal to 1 lakh 20,000. So total installment is 3 lakh plus 1 lakh 20,000 is equal to 4 lakh 20,000. Third installment, on third installment we will calculate interest on rupees 3 lakh. Why 3 lakh? Because out of 9 lakh rupees 3 lakh has been paid for first installment and another 3 lakh rupees has been paid for second installment. So balance is rupees 3 lakh. 9 lakh minus 3 lakh minus 3 lakh is equal to 3 lakh. So 3 lakh into 20% interest is equal to 60,000. So total installment is rupees 3 lakh 60,000. How much we have paid to buy a car through hire purchase system? So initially we have paid 1 lakh rupees as down payment, and in the first installment we have paid rupees 4 lakh 80,000, and in the second installment we have paid rupees 4 lakh 20,000, and in the third installment we have paid rupees 3 lakh 60,000. So total price we have paid rupees 13 lakh 60,000. So this price is known as hire purchase price. So what is cash price? Cash price is rupees 10 lakh and down payment is rupees 1 lakh. Hire purchase price is rupees 13 lakh 60,000 and total interest rupees 3 lakh 60,000. How we get 3 lakh 60,000? 1 lakh 80,000 plus 1 lakh 20,000 plus 60,000, then we get rupees 3 lakh 60,000 as a total interest. If we had purchased this car in cash, we would have paid rupees 10 lakh instead of rupees 13 lakh 60,000. So rupees 3 lakh 60,000 is the interest. In hire purchase system, ownership is in the hand of hire seller. Unless the buyer pays last installment, he will not get ownership right. If suppose buyer fails to pay any installment, then seller has right to take back the assets, and till that date whatever installment he has paid will be treated as a rent of that assets. Now we are discussing entries in the books of hire purchaser and entries in the books of hire vendor. First entry is related to goods purchased. Assets account debit to vendor account being cash price of goods purchased. Why we are debiting assets account? Because all assets has debit balance. And entries in the books of hire vendor, hire purchases account debit to hire sales account being cash price of goods purchased. Second entry is related to down payment. Vendor's account debit to bank account being down payment made. And entries in the books of hire vendor, bank account debit to hire purchaser account being down payment received. Third entry is interest due. interest is an expense, so that's why we are debiting in the interest account. Interest account debit to vendor's account, being interest due, and entries in the books of hire vendor. Hire purchaser's account debit to interest account. Why we are crediting interest account here? Because interest is the income for hire vendor. That's why we are crediting interest account, being interest due. Fourth is vendor's account debit to bank account, being installment paid, and entries in the books of hire vendor. Bank account debit to hire purchaser account, being installment received. Fifth entry is related to depreciation account. So depreciation is our expense, that's why we are debiting depreciation account. So depreciation account debit to assets account, being depreciation charge on cash price, and entries in the books of hire vendor, there is no entry. Let's understand the question. On 1st April 2010, Rajesh purchased a machine from Ashoka Store Limited on hire purchase system. The particulars are as follow. First, cash price rupees 20,000, rupees 8,000 to be paid on signing the agreement, balance in 3 equal installment of rupees 4,000 plus interest, interest charge on outstanding balance at the rate 12% per annum, depreciation at the rate 10% per annum on written down value method, prepare machinery account and hire vendors account in the books of hire purchaser. Books are closed on 31st March every year. Now come to the answer. Machinery account, debit, credit, date, particulars, amount, date, particulars, amount. On 1st April 2010, Mr. Rajesh purchased a machinery from Ashoka Limited. Entry will be machine account debit to Ashoka Limited, rupees 20,000. All books are closed on 31st March every year. So we will charge depreciation on 31st March. And what will be the entry of depreciation? Depreciation account debit to machinery account, and depreciation rate is 10%. Method is written down value method. So 10% of 20,000, 2,000. On 31st March 2011, by balance carried down 18,000 rupees. It means after charging depreciation of 2,000, machine value will be 18,000 at the end of the year. So this balance will be brought down to the next year. On 1st April 2011, to balance brought down rupees 18,000, and next year we will charge depreciation on this reducing value 18,000. So 18,000 into 10%, then we get 1,800 as depreciation. And 31st March 2012, by balance carried down 16,200. So this balance will be brought down to the next year. On 1st April 2012, to balance brought down 16,200, and third year we will charge depreciation on this value 16,200. So 31st March 2013, by depreciation 1,620. 31st March 2013, by balance carried down 14,580. So total is 16,200. Ashoka Limited, this is vendor account, debit, credit, date, particulars, amount, date, particulars, amount. On 1st April 2010, Rajesh paid 8,000 rupees as a down payment. So what will be the entry? Entry will be vendor account debit to bank account. Vendor means Ashoka Limited. So Ashoka Limited account debit to bank account. If we do ledger posting of Ashoka Limited, then we will write to bank on the debit side. So to bank 8,000. On 1st April 2010, by machinery account 20,000. Rajesh purchased machinery on 1st April, then what will be the entry? Entry will be machine account debit to Ashoka Limited. If we do ledger posting of Ashoka Limited, then we will write by machinery account 20,000. And now we will charge interest. What will be the entry of interest due? Entry will be interest account debit to Ashoka Limited. Why we are debiting interest? As interest is our expense. So that's why we are debiting interest account. And if we do ledger posting of Ashoka Limited, then we will write by interest. 12,000 into 12%, then we get 1,440 as interest. How we get 12,000? Total value of machinery is 20,000 and we have paid 8,000 rupees as a down payment. Then balance remaining amount is 12,000. So we will charge interest on 12,000 rupees. 31st March 2011 to bank account. This is installment entry. Ashoka Limited account debit to bank account. Installment consists of cash price plus interest. Cash price is 4,000, which is mentioned in the question, plus interest is 1,440 is equal to 5,440. So after adjusting all, we get two balance carried down of rupees 8,000 on 31st March 2011. This balance will be brought down to the next year. On 1st April 2011, by balance brought down rupees 8,000, and now we will charge interest on 8,000 rupees. Why 8,000? As out of 12,000 rupees, 4,000 we have paid, so balance is 8,000. So 8,000 into 12%, then we get 960 total interest. So on 31st March 2012 to bank account, this is installment entry. 4,000 rupees installment plus interest, 4,000 rupees installment which is mentioned in the question, plus 960 as interest. So total installment paid rupees 4,960. So after adjusting all, then we get two balance carried down 4,000 rupees on 31st March 2012. Then this balance will be brought down to the next year. On 1st April 2012, by balance brought down rupees 4,000, and now we will charge interest on 4,000 rupees. Why 4,000 rupees? Because out of 12,000 rupees, we have paid 4,000 in the first installment, then another 4,000 in the second installment. Now remaining is 4,000. So 4,000 into 12% is equal to 480 as the interest. So whole amount we will pay through bank. So 31st March 2013 to bank account 4,480 rupees. In the next video, we will do important adjustment. Now that this is done, if you have any doubt, then please let me know in the comment section. Thank you.